Good evening. Welcome to our special coverage of the consumer price inflation number for January that is due anytime now. The number that our poll threw up was 3.21%. That would be some kind of a near-term low, probably a two-year low or thereabouts. I think the lowest since the new CPI series began in 2014. So that would be quite historic, 3.2% inflation, and it would be pulled down largely by food inflation that's expected to come as low as probably 1.2%. We are still awaiting the numbers as the board indicates. Inflation numbers have been falling rather steadily from September onwards, and now at 3.2%, it would be the third consecutive month that inflation is ticking below the 4% mark and now pretty close to even breaching the 3% mark. We should be getting the number anytime now, still awaiting it from the government websites, PIB. We are joined by Rupa Reganithuri, the chief economist at L&T Finance. And in a minute, okay, Jayesh Mehta has also joined us. Rupa, what is the number you are working with?
My forecast is 3.03.
Okay.
Because you see, Department of Consumer Affairs data, if you take leads from that, the prices of pulses have crashed. I mean, across various categories, edible oils, all major varieties of edible oils, we have seen a crash, potatoes, tomatoes. So I feel, food inflation could be well below 1% this time.
Okay.
And in core inflation also, some of the services like household goods and services, personal care services, recreation services, we have been seeing a steady decline for last 2 months. So, I have factored in all that in my projection.
Okay. Well, Jayesh, will 3% inflation lower than even our forecasts make a difference to the market, or is the market pretty sure that irrespective of this inflation number, the Reserve Bank will stay pat in the coming monetary policies?
I think they have preempted by saying February, March will be lower. And of course, they are looking at inflation going up to 4.5 plus in the second half of 2018. So unless we see 3-4 prints, maybe the April-May number coming down dramatically, and then of course people would be watching just the core also. If it is coming down, then I think market would look at something different. Of course, it will have temporary joy if it comes to 3% or 3.03.
Okay, Jayesh, the number has come and it is as low as 3.17%. And the food inflation is, as Rupa said, below 1%. It's 0.53%. So that's a historic number, I would think, in terms of food inflation, coming in at 0.53. Remember, the December number was 1.37, which itself was a continuous low that we were seeing in inflation numbers. But this is a rather historic number as far as food inflation is concerned, and 3.17 again, very close to 3%. So let me just get through with the key numbers. Okay, cereals at 5.23%, meat and fish have fallen to 2.9%, egg at 2.6%, milk products at 4%, 4.2 actually, oils and fats 3% inflation. Fruit is at 5.8, and vegetables, as Rupa was pointing out, minus 15.62%. So that's a huge fall that we're seeing in vegetable prices. And January of last year was not a very bad month anyways, but this is a huge fall. Pulses, again, as Rupa pointed out, minus 6.62%. Sugar's gone up 18.7%, that was known. Then spices, 5%. Prepared meals, 5.5%. So overall, food and beverages is 1.29%. But remember, food alone is 0.53%. As bad as that, or as minor as that. That could, of course, contain the seeds of future inflation, with people not willing to sow crops like pulses and vegetables in future months. We do not know yet, but that could also be a sign of trouble. Let me read out the other numbers as well. Clothing, 4.83%, and footwear, 4%. So clothing and footwear is 4.71%. Housing comes in at 5%. Those are the numbers that are not falling much, but they don't get updated very often, once in 6 months. Fuel and light, again, very low at 3.4%. Let me give you the miscellaneous numbers or the services numbers. Household goods and services, 4.19. Health at 4.18. Transport at 5.4. That indicates the rise in petrol and diesel prices. Recreation and amusement, 3.76. Education, again, one of those unbending numbers, the one that Reserve Bank is perennially worried about, the non-food, non-fuel inflation. Education coming in at 5.6%, just refusing to go below that 5% mark. And personal care and effects, again, I think reflecting gold, is up at 6.3%. So personal care and services, education, both higher, well above that 5% mark. And that brings the overall miscellaneous at 5.06. I still await the exact core inflation number. Our team should be able to flash it anytime soon. But Rupa, your first thoughts about these numbers?
See, these numbers definitely show that, the whole move of demonetization has been disinflationary, and
Okay, may I pause
negative.
for a minute, Rupa? I do have the core inflation number, and I think the team should flash this. The core inflation has come in at 5.08%. Now, that's a bit of a rise compared to the fact that core inflation last month stood at 4.9%, and even that was a little above the 4.8%. So core inflation was between the 4.7 and 4.9% mark since August, but it has risen to 5%, in fact, inching closer to 5.1% in the month of January. Go ahead, Rupa. Is that a further affirmation that the Reserve Bank will not be moved by the food inflation number?
I'm not so sure, Latha, because another very important thing which came after policy was announced was household sector's inflationary expectations reading. And after several quarters, we have seen that, it has fallen to 7.9%. Last quarter, it was 9.7%. So I think, inflationary expectations actually signal, and they have a lot of influence on wage setting processes and generalized inflation. So as Jayesh said, for next 2-3 months, if we indeed see weaknesses in activity indicators and headline CPI and inflation expectations, then I think that it will be premature for us to conclude that the rate easing cycle is over.
Okay, well, let me get Shaumya Kanti Ghosh, the chief economist from SBI, into this conversation. Shaumya, the core inflation number that I have got is 5.08. What are your calculations showing? Is it about 5%?
What is the headline CPI? I haven't.
Oh, sorry. The headline CPI has come in at 3.17%, and the food CPI has come in at 0.5%, 0.53 to be precise. I could quickly run the entire set of numbers by you. Yes, sir. Cereals 5.23, meat and fish 2.9, egg 2.6, milk 4%, oils and fats 3.12, fruits 5.81, vegetables minus 15.6, pulses minus 6.6. Soumya, remember you were the first person to say that you will see a crash in pulse prices. You told us as early as August and September. Sugar plus 18.7%, spices plus 5%, and therefore overall food and beverages up 1.29, but food alone is 0.53%. Miscellaneous is 5.06. The higher elements are education 5.62 and personal care 6.29. Shaumya, your core inflation number?
Yeah, I think based on this, I have not estimated, but I believe the core inflation could have up a little bit. It should be a little more than the 5%. But I am very, I am very happy that the headline CPI is coming at 3%. So that's even lower than the expectations we are having.
Yes.
And at this rate, I think now the March CPI number should also be lower than 4%.
Should be lower than, sorry, the March CPI should be?
March CPI should also be lower than 4%. So
lower than 4%?
Yes. So February CPI should be definitely lower than 4%. It should move up from, because I think
Does it pierce 3%? Soumya, we are losing you. If you can reconnect your line, is there a chance of 3% also getting breached?
No, I don't think so. Lowest level which it could have reached in January. Now it should start moving up.
Okay.
It should not cross 4% by March. So that means that the March CPI number could actually shoot the RBI projection by now close to 90, 100 basis points. So this means that next year's CPI numbers also as now would be even lower than 4.5% or so on an average.
But will that change the RBI's mind, do you think, when it meets on April, in the April policy?
See, it will be a little difficult in the mind in April because the RBI is not yet sure of the global uncertainties when the Fed is going to raise. If suppose the Fed goes for a rate hike before that, that could actually change the mind. But I believe that the core CPI number will be very below 4.5% because if you look into
Soumya, we are losing you. I think we should dial you again. We will do that in just a minute. Jayesh, will these subpar numbers on food inflation and even the lower than expected numbers change the RBI's mind at all, you think, considering that core inflation, at least for the moment, is standing at 5%?
No, I think they have been very specific and categorical about sticky 4.9 core inflation, and this is not a good news from a RBI perspective. But as I said, like we still have to see, and as Soumya said, like if we see the March number also coming below 4, and if we see a trend coming in. But as I said, like they have really preempted a lot of things. So, you know, we are looking at like second half 2018 being 4.5% plus. Like you know, so even if we have sub 3%, does it make any sense at this juncture? Not, except for maybe temporary cheer. But beyond that, I don't think much can change their mind for April at this juncture.
Okay. Well, you may be right because you have also seen a sharp uptick in personal care and effects. That has gone up from 121.1 to 121.7 index number only in 1 month. Education has gone up from 133.1 to 133.4, and recreation and amusement has also inched up from 124.2 to 124.3. So all the services indices have gone up just a bit. Soumya, if we have you back on the line, you were telling us about core inflation and its trajectory. It is above 5%, almost 5.1 at this for the month of January. You see that declining at all?
See, core is at 5.08%. So it has moved up. And I think right now the trajectory of the core CPI could be a little bit on the higher side because if you remember, March, April are typically the month education component goes up because of all the seasonality. Then we can see some amount of hardening in the core CPI.
No, Soumya, we've lost you again. We need to connect you on a landline, I guess. We are getting you on the cell. We'll try again, but I think Soumya was making the point that in March, education numbers actually go up, so we can't see a fall in core inflation. Rupa, what's your sense? Since the Reserve Bank and, in fact, all the Monetary Policy Committee members in December again and again spoke of core inflation, it was writ large in the monetary policy statement as well. So do you think if core inflation ticked higher in March, we have any scope for easing, or we should give up any hope of a rate cut?
I think they will also look at activity indicators, and if we really see growth collapsing like we had seen in the month of December, which shows a very broad-based deceleration across all groups, you know, whether capital goods, all consumer goods, they would give some weightage to that. But yes, global factors and, you know, sticky components of core inflation will certainly have a role in their decision making. But I personally feel that, you know, they would also attach higher weightage to household sector's inflation expectations, because why we are ignoring this very important data point, which is showing a sharp decline after several quarters. So I feel that you see, household sector is like a mirror which is facing the price situation day in and day out, and transportation services in the unorganized sector, hospitality services in unorganized sectors, everybody knows have been badly impacted, and they are not captured by official CPI numbers. So I think they will combine their survey and outlook results along with official indicators and arrive at some decisions.
So in your book, there is one more rate cut.
There is a possibility, because I feel that growth deceleration has been much sharper than anybody had expected earlier.
Okay. Jayesh, how will the bond markets trade? Are you expecting them to linger between 6.75 and 6.8? Do you see them making a dash towards 7, or any sell-off at all, or any purchase of bonds at 6.8?
No, so as of right now, it's kind of stabilized at 6.8. So you might, of course, tomorrow see a little bit of relifting of 5-7 basis point, maybe 673, 675. But, with no clear-cut indication, unless we see RBI changing in the April policy, their forecast of 4.5% for the second half, April onwards, you will have a weekly flow of 15,000 crores coming in as a supply. So I don't see any relief really coming there. Maybe temporarily, yes, 5-7 basis point to maybe 675. Maybe 675, 685 is the range I would look at for next few days, and then as we go to the March with thin market, it can go either way. But April definitely it breaches above 685 unless we see they're changing their projection for second half of 18 to below 4.5%.
Okay. So nothing really will make you buy a bond today, not the 10-year, not duration.
No, we are always market makers, so we are always buying, selling, so we will always be there.
All right. But there isn't any longer-term benefit, no benefit in staying in the
There's no
10-year.
thematic.
Okay, there's
no
theme.
thematic.
Fair point. Rupa, final question to you. What do you see as the trajectory? What do you see in March? And what do you see as the average, say, April to June?
Well, I'm pretty confident that it will be below 4% in March also, and of course after that base effect will also start having its role. But there I think I'll go with RBI's expectation that in the first half the CPI print will remain benign. But we have to also remember, Latha, that the nominal anchor is headline inflation and not core inflation. So if headline inflation is collapsing, they will have to attach some weightage to that.
Okay, well, one hopes they do. After all, they went into this monetary policy with 3 readings below 4%, but they still chose to change from accommodative to neutral policy. Whether 1 or 2 more readings below 4% will change the Reserve Bank's mind looks a little difficult to tell, a little difficult to expect, especially when it is being accompanied by a core inflation that is actually inching higher towards 5 and 5.1. And global metal and crude prices are showing no signs of any abatement. All these perhaps make up the Reserve Bank's neutral policy rather than accommodative policy. That's it on this special coverage of the Consumer Price Inflation Index number that's just hit the wires. Jayesh Mehta and Rupa, thank you very much for joining us in this conversation. The news is that inflation is below the market's expectation. Food inflation is way below the market expectation, and the lowest we have seen in probably decades at 0.5%, 0.5% rise in food inflation numbers, the lowest that we have seen in perhaps a decade and more. Yet the Reserve Bank expected to remain unmoved because the non-food, non-fuel inflation number, core inflation, has actually ticked higher to over 5%. That's it on the special coverage.